Today's financial advice is sponsored by Endeavor Private Wealth. Well, Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our weekly segment on investing. Chris, good morning.
Good morning.
I'm going to start out. I want to ask you for your thoughts on something that seems a little befuddling. How is it that bad economic news is often viewed as good for the stock market, while good economic news is considered bad? You know, shouldn't good news be good news and bad news be bad news, essentially?
It does seem counterintuitive. Whether it's good news or bad news, it always sparks an opinion, an explanation, a rationale, or an excuse for its probable impact on the market, up or down. To every point in favor of one possible outcome, there's usually a counter point in the other direction.
And can you give us some examples of, I guess, bad news that may lead to gains in the market and good news that may spark losses?
Sure. A lot depends on where we are at in the market and interest rate cycles. Currently, the Federal Reserve is trying to temper the economy by raising interest rates to fight inflation. So bad news, such as weakness in consumer demand, lower wage growth, layoffs, and a slowdown in manufacturing, could be good for the market because it may indicate that the Fed policy is working in steering us towards a soft landing.
And what about good news, like lower inflation readings, I guess stronger than expected economic growth, very low employment rate? Those don't sound like bad things, but are they?
They're not. When all the economic stars align and the Fed gets what it wants, 2% inflation, full employment, and a healthy and growing economy that isn't overheating. That's what is also described as the Goldilocks scenario, where everything is just right. What we've been experiencing recently is a series of lower inflation readings, and that's good. However, it could be bad if it causes the Fed to pivot or ease monetary policy prematurely, reigniting inflation. If the economy gains strength and GDP expands, that's good. But it could be viewed as bad if it fuels inflation and causes the Fed to continue raising interest rates, perhaps overdoing it and causing a severe recession. And while everyone who wants a job should have a job, a tight labor market increases the pressure on employers to raise wages and retain and attract workers. And that, again, could be bad if it continues to inflate wages.
Okay, Chris, my head's spinning a little bit. All right. I sense there's a lot more to this as well.
There is a lot more. Let's consider the pros and cons of a strong U.S. dollar. The greenback has risen in value quite substantially relative to the currency of many of our trading partners: the euro, the Japanese yen, the British pound, and the Canadian dollar. And that's good news for U.S. consumers who will pay less for imported goods. But it may be bad for the stocks of our multinational companies because foreign consumers will buy fewer American goods because they're more expensive, which will hurt the profits of those companies.
Well, Chris, we're running short on time. I'd like to continue our discussions on our next program, but until then, what advice do you have for our viewers?
Everyone should remember that there's a major difference between long-term investors and people who trade the market. Traders usually have extremely short time frames and try to gain economic advantages by anticipating the different types of market events and their potential consequences. They often utilize complex algorithms and trading programs to allow them to react in split seconds. Whether their reactionary trading style works or not is another matter. What I worry about is long-term investors getting distracted by all the yin and yang and the opposite and divergent sides associated with specific events and developments. It's a dangerous game for long-term investors to extrapolate just a few small data points into long-term trends, possibly upsetting sound and thoughtful financial plans they should have in place under the guidance of a trusted financial advisor.
Chris, as always, thank you for your insights, and have a good rest of your day or a bad day, whatever. It seems like it all could be pretty good. And to learn more about Endeavor Private Wealth, visit EndeavorPW.com.